Hey there, estate planning attorney Paul Rabalais here, and in this video we're going to talk about the proposed elimination of the step-up in basis. All right, so I've been reviewing the current administration's 107-page proposal for tax reforms, printed off a couple of pages just so I could show you. So here's the cover page, general explanations of the administration's fiscal year 2022 revenue proposals, and produced by the Department of the Treasury in May 2021. That's just the cover page of the 107 pages of proposals. And then just to set the tone, I thought I'd print off and read to you two sentences, top of page one, very beginning, just to give you an idea of what the administration considers to be the purpose of the tax revenue proposal. So it says, in the fiscal year 2022 budget, the President proposes a number of reforms to the Internal Revenue Code that would modernize our tax system to respond to today's challenges. These changes would raise revenue, improve tax administration, and make the tax system more equitable and efficient. There you go. So now, even though the proposals are 107 pages in length, I'm going to focus on the roughly 4 or 5 pages that have to do with the step-up in basis. Let's jump right in. Okay, first I want to tell you what the current law is, then I'm going to tell you what the proposed tax law is, and then maybe we'll chat a minute for about what the effect of it is. Okay, current law. Current law, capital gains are taxable only upon the sale of an asset. So let's say mom acquired stock many years ago for $5,000. It's now worth $50,000. And under current law, when she either gives that stock away, perhaps to her daughter, or she dies and leaves it to her daughter, there's no capital gains tax due because capital gains tax is collected only upon the sale or disposition of an asset. But there are some, you need to understand the current rules as they relate to the basis of that stock. When mom bought it for $5,000, that established her basis of the stock. She never sold it, and now it's worth $50,000. But I want to distinguish between the basis under current law if mom either donates it or leaves it to someone when she dies. If mom donates that stock, let's say to her daughter, she donated an appreciated asset, bought it for $5,000, now it's worth $50,000. When she gives that asset to her daughter gets what's called the carried over basis or carryover basis. So whatever mom's basis was, $5,000, by mom, during mom's lifetime, donating it to her daughter, the daughter gets mom's carryover basis, $5,000. Still no tax due because mom gave the stock to the daughter. But when the daughter subsequently sells the stock, maybe 6 months later, maybe 5 years later, maybe the daughter never sells the stock. But whenever that stock is sold in the future by the daughter, the basis will be $5,000 because the basis on a gift that's made during the donor's lifetime, the basis gets carried over to the donee. Now we got a completely different rule. If mom doesn't sell that stock, she holds on to it, she passes away, and she leaves it to her daughter. Now, what happened was, mom years ago, she bought the stock for $5,000. It's now worth $50,000. She dies and she leaves that stock to her daughter. Well, because mom left that stock to her daughter and the daughter received it as a result of mom's passing away, now the basis is not carried over from mom to the daughter. The basis gets stepped up to the value of the stock on the date that mom died. So years ago, mom bought the stock for $5,000. It's now worth $50,000. Sorry, mom passes away, leaves that stock to her daughter. The daughter's, again, no capital gains tax due now, but under current law, daughter, it's really a good thing, daughter inherits that stock at a stepped up basis. So daughter's basis in the stock is the value on the date that mom died. Daughter's basis $50,000. And so when daughter sells that stock in the future, she'll only owe capital gains tax on everything that she receives in excess of $50,000. Oh, by the way, under the proposal, the capital gains tax is really expected to just about double. The rate is expected to just about double, but that's another issue. We're talking basis right now. So I think you understand, or should understand now. You make a lifetime gift of an appreciated asset. The donee gets the carried over basis. Leave that stock when you die to someone. The recipient of that gets that stepped up basis. All right. Now, the proposal is that, both proposal, it's a big change. Both the lifetime donor and the deceased owner of an appreciated asset would realize a capital gain at the time of the transfer. So let's go back. Mom bought stock, $5,000, now worth $50,000. Mom decides to give that stock to daughter while mom's alive. So the fact that mom donated the stock to the daughter, that's now time to realize the capital gain. So mom will have to realize that $45,000 of capital gain by transferring that stock during mom's lifetime to her daughter. Mom paid $5,000, now it's worth $50,000. That's capital gain that would be reported on mom's income tax return of $45,000, again at our increased capital gains tax rate. So by mom giving her daughter $50,000 worth of appreciated stock, she gives the stock to the daughter, and then at the same time, she writes a check for maybe $10,000, $15,000, $20,000 to the IRS for the privilege of donating that stock to her daughter. Now, kind of same thing if mom dies and leaves that stock to her daughter. That when mom dies, that's a capital gains tax realization event. So daughter inherits the stock worth $50,000, but mom's estate has to report that capital gain, $45,000 of capital gain, and again, likely pay $10,000, $15,000, $20,000 of capital gains tax. So now, a couple of exclusions that are worth mentioning. So each person is entitled to, it's a $1 million per person exclusion from the recognition of unrealized capital gain on property transferred by gift or held at death. So the first $1 million, that realization of capital gains tax doesn't apply on the gift or on the bequest at death. Now that $1 million exclusion, it will get indexed for inflation after 2022, the year 2022. And not insignificant, it will be what's called portable to the decedent's surviving spouse. So if mom didn't use it, and mom died before dad, then now dad will get a $2 million exclusion from recognition of unrealized capital gains on property transferred by gift or held at death. So what's the effect of this proposal? I think gifting of appreciated assets is going to just stop. The idea of maybe a grandparent who worked hard and saved and invested, the idea of a grandparent maybe doing something for their grandchild, whereas today they might say, grandchild, I'd like to give you this $100,000 of stock. It's really, really grown in value, but I want to give it to you, and you can use it as a nest egg, and just know that you'll always have that there for yourself in case you really need it or have a rainy day. Grandparent ain't gonna do that anymore, because by giving that $100,000 of stock to his grandson or granddaughter, he's gonna have to cut a check to the IRS for maybe $30,000 or so. And so grandparents they're just not going to do that. It's going to be too expensive to transfer appreciated assets to others, because you have to realize the capital gain and pay the IRS at the time of the transfer. So realize also that this has really been a capital gains and a basis discussion. This isn't by grandpa giving $100,000 to his grandson. We realize there's an additional gift and estate tax discussion. Grandpa can give $15,000 to as many people as he wants to, and if he gives more than that, he uses up some of his $11.7 million exemption. That's a completely different discussion than the basis discussion that has been the subject of this video. So just wanted to give you an idea of what our current basis rules are and talk about what the proposal, again, just a proposal. It's not in effect. It hasn't been passed. It is, it's a proposal. And a lot of times proposals don't get passed, or they get negotiated and they get changed. But just giving you a little heads up that our administration is proposing this elimination of the step up in basis, subject to certain exclusions like the $1 million per person exclusion. Okay, hope that helps. I'll keep you informed. Make sure you like and subscribe so you don't miss anything, and we'll see you next time.